Hello and welcome. We are so pleased to have you join us for today's webinar, Introduction to Social Justice Investing. My name is Mika Weinstein, and I'm the Director of Operations at Just Futures, the primary sponsor of this event. If you haven't already, please go ahead and introduce yourself in the chat with your name, pronouns, your organization, if you have one, and an acknowledgement of the original caretakers of the land that you're on. And we'd also love to hear why you joined this webinar today. The Just Futures team is distributed across Turtle Island, and I myself am located on the unceded land of the Piscataway and Nacotchink Nations. The Justice Funders Office, they're our co-hosts today, are located on the unceded land of the Lishan Ohlone people. All of us who are not Indigenous, particularly those of us who work in the philanthropic and finance sectors, have benefited from the genocide waged against Indigenous people and the theft and occupation of Indigenous land. So you can learn more about the original caretakers of the land that you're on using the link on the slide or that's being dropped in the chat. We're going to start with some housekeeping today. So if you experience technical difficulties during this webinar, you can use the phone number on the screen to contact Zoom support directly. You can also contact Courtney from our team by emailing courtney@justfutures.co. This webinar will be presented in English, and auto-generated closed captions in English are available. You can turn them on or off by clicking on the CC Live transcript icon that should be on the Zoom toolbar at the bottom or the top of your screen. Today's webinar will be recorded, and we'll share that recording with all of you afterwards. In order to submit a question during the webinar, we ask that you use the Q&A feature on your webinar toolbar. Again, you should be able to find that by hovering at the top or the bottom of your screen. If you submit questions into the chat, we're hoping that there's rich conversation going in there and we don't want to lose track of your questions. So please do make sure that you put questions that you have into the Q&A itself. So I want to share briefly about Just Futures and why we produced this event. This is our first public event, our debut. So thank you so much for joining us for this special occasion. Our co-founders, Alex Sangchin and Steve Choi, came together about a year ago to start this initiative. They had experienced themselves and also had heard from nonprofit community and activist friends about unmet needs around retirement and investing. So our mission is to create a platform that connects nonprofits and their workers with investments that are increasingly aligned with the needs of people, communities, and our one planet. We are a people of color and gender diverse public benefit corporation, but it's not just about us. We want true movement governance. So we are committed to 30% non-dilutable ownership by nonprofit and social movement organizations that are working toward a just transition to a regenerative economy. Our first product offering will be a 401k retirement plan, which will launch this summer. We're very excited about it. And in creating this plan, we're trying to tackle the fact that of the $9 trillion that are currently invested in 401k or 403b plans, only 3% of that is deployed in responsible or ESG funds. And even those funds can raise questions around ethics, especially for nonprofit or mission-driven workers like us. And we'll get into that more during the presentation. So Just Futures will create a vehicle that can serve as a bridge, moving capital over time from extractive investments to less extractive investments, and eventually into restorative and regenerative funds. We know it's not easy. We recognize that there's some contradiction, right, in creating a product that's based in public markets, which are inherently extractive, while touting these social justice investments. But we know that this sector needs an intervention, and we sponsored this research to figure out if we could do it. And our research will be ongoing. I want to name just two more things before we move on. The first is that there were a ton of questions submitted through the registration on retirement specifically. We're thrilled about all the interest there, and we're also not going to talk about that today. We will get into how all of this relates to retirement investing specifically in the third session of the series, which will take place on June 22nd. So please make sure that you register and join for that section as well. And then secondly, this webinar series mirrors content that has been developed for a written report, and that report will be published before the final session in this series. So we'll share that with you when it's released, and you can look forward to having another medium for all of this amazing work. I want to give a huge shout out and thank you to the co-sponsors of this event: Justice Funders, Solid Air, Center for Economic Democracy, Resource Generation, Full Spectrum Capital Partners, Common Future, Transform Finance, Funders for Justice, and Neighborhood Funders Group. If you aren't familiar with some or all of them, I encourage you to check them out. And some of us will be live tweeting this event using the hashtag social justice investing. So if Twitter is your thing, please join in with that conversation. I'm going to briefly introduce today's speakers, and then we'll get started with the event. So I've already introduced myself. Anand Jahai is a consultant for Just Futures and the principal researcher on this project. The written report that I mentioned just now was authored by Anand. We'll also be hearing from Maria Nakai from Justice Funders, Amrita Wasan from Center for Economic Democracy, and Nia Evans and Jock Payton from Boston Ujima Project. All right, so in a moment, I'll turn it over to Maria to kick off the discussion around defining social justice investing. Then we'll talk about false solutions before getting into a rich exchange with Nia and Jock about putting these principles into action with Boston Ujima Project. At the end, we'll have time to answer some of your questions, so please do use that Q&A feature throughout. You are still muted, Maria.
Okay, I think you can hear me now. Thank you so much, Mika, for getting us started. My name is Maria Nakai, and I'm with Justice Funders. Good morning and good afternoon, everyone. It's such an honor to be part of this conversation with so many allies and co-conspirators in this work who are advancing a shared understanding and vision of social justice investing. So as you saw in the agenda, this first part that a few of us will be speaking to is what social justice investing really means to us. The term has become pretty common and pretty popular in recent years, and I'd say that it has really different meanings for different people. Some use the term to refer to investing strategies that use the structures and institutions of the dominant financial system, including the stock market or venture capital, to pursue outcomes that could have social or environmental benefits. But the stories and the definitions that you'll be hearing about today and in this webinar series are outside of those dominant structures. And in fact, they're part of a fundamentally different approach to investing that's being led by social justice movements, which pursue not just social and environmental benefit, but transformative social change and a transition away from our current extractive, profit-driven capitalist economic system. There are, these are the very social justice movements who are employing grassroots organizing, power building, and movement building strategies to take bold and courageous action to effect the wide-scale systemic change that's needed to manifest a radically different future. So the movements that we're referring to today are the people-powered social movements led by folks who are most impacted by systemic injustice, particularly Black, Indigenous, and people of color and working class folks that are building community power and driving systemic change that have an organized base, like the movements for Black liberation, Indigenous sovereignty, and climate justice. And because social justice movements recognize that the root causes of injustice are systemic, and because our solutions have to match the scale of our problems, it's clear that incremental changes and reformist approaches are not sufficient to manifest the changes that we seek. Rather, what we need is a wholesale transformation of our economic system, or a just transition away from our current extractive economy toward a more regenerative one. So some of you might be familiar with this Just Transition framework, developed by movement visionaries, including the good folks at Climate Justice Alliance and Movement Generations and others. A just transition requires us to simultaneously use oppositional strategies that stop the bad, which means dismantling the systems that harm us, while also using visionary strategies to build the new, which means reimagining and proactively building an alternative economic system that prioritizes people and planet over profit, in which social, racial, and economic justice can truly be a reality. And we see expressions of this just transition all around us as our movements build local, regenerative solidarity economies centered around community ownership, regenerative democratic governance, and self-determination, which build the political, economic, and cultural power of communities most harmed by systemic injustice. The building blocks of these local regenerative solidarity economies are community-controlled institutions that provide for everyone's needs, especially those who've been harmed or left or locked out of the extractive economy. So that includes things like cooperative housing, community land trusts, worker-owned enterprises, community-owned renewable energy, and community-governed loan funds. So capital investments in these kinds of community-controlled institutions are what we consider social justice investing. So at Justice Funders, we work with foundations who share this vision of transformative social change and economic systems change, and who want to play a proactive role in ushering a just transition. That means starting with the recognition that foundations are both beneficiaries and contributors to the extractive economy, which has allowed a very small percentage of individuals and families to accumulate massive amounts of wealth through the extraction of wealth from communities, through the exploitation of human labor, and as well as the extraction of natural resources. And because philanthropic wealth comes from these historical and current practices of extraction and exploitation, we believe philanthropy has a moral obligation to repair these harms and redistribute wealth and power to the communities who've been most harmed. Guided by the Just Transition framework, what we seek is a just transition for philanthropy. If we can put that slide up, please. Calling on philanthropic institutions to end wealth accumulation, redistribute wealth, democratize power, and shift economic control to the communities who have borne the brunt of the extractive economy, particularly Black, Indigenous, and other communities of color. And because foundations are only required by law to disperse 5% of their assets each year, and the vast majority of those assets are invested in the extractive economy for maximum financial return so that foundations can exist in perpetuity, we have to really think expansively about what the redistribution of wealth can look like. For foundations to redistribute wealth means not only providing grant dollars to support organizing and movement building, but also investment capital to the economic activities that build local regenerative solidarity economies. What this means in practice is a commitment to making measurable shifts in assets out of the extractive economy, including Wall Street, venture capital, and speculative real estate, and into regenerative solidarity economies that build economic power and self-determination in BIPOC communities to reduce their reliance on institutional philanthropy over the long term. And these same principles and practices can apply to investors, investment advisors, and wealth managers who aren't part of foundations, but whose wealth has also been accumulated through the same extractive means and want to play a proactive role in building a just and thriving world. So for folks who are joining us today who are investors or finance professionals, the ways that we're defining and describing social justice investing might look and sound really different from the ESG and impact investing strategies that you're familiar with. The leaders you'll be hearing from today might not look or sound like those who you might expect to hear from in most conversations about investing. And if, from your vantage point, you consider investing as a vehicle primarily for the purpose of making a maximum financial return for investors, today's conversation might actually challenge your very assumptions and preconceptions about what investing is for. And for others, this may be very familiar to you, as you already are part of this vibrant and growing community of folks who are leading, supporting, practicing, and promoting these strategies, including our friends at Resource Generation, Cordata Capital, Katali Foundation's Restorative Economies Fund, to name a few, along with all of the movement leaders and organizations who you'll be hearing about today and through this series. So we'll get into some specific criteria about how Just Futures defines social justice investing in just a few minutes. But for now, I think I'll wrap up by naming some of the shared characteristics of the examples of social justice investing that you'll be hearing about in this series. So first, social justice investing is rooted in the leadership, values, and priorities of social justice movements and movement leaders looking to advance systemic change each and every day. These are leaders and organizations who are raising and deploying capital in ways that fundamentally challenge our assumptions about what capital should be used for. Social justice investing is also focused on building the economic power of communities from whom wealth has historically been extracted by centering the redistribution of wealth and power to allow communities to retain the financial profit from their economic activities. Not that there will never be any financial returns for investors, but maximizing financial returns for investors is not the primary purpose. And finally, social justice investing means mobilizing investment capital to community-controlled institutions that are being built by the same organizations, alliances, and ecosystems that are employing organizing and movement-building strategies to affect social change. So while there is a role for shareholder activism through stock market investments, we see efforts to change the practices of publicly traded companies as part of the stopping the bad, part of the just transition framework. And mostly what we're talking about today is really building the new. And that's partly because we see the stock market as a central institution of the extractive capitalist economic system. Now, all that being said, there is some really exciting work being developed by Center for Economic Democracy focused on how investors can coordinate with social movement leaders and align with social movement goals through investments in both local community-controlled institutions and also in public market investments. So I will pass it on to Amrita to talk about that.
Thank you, Maria. I'm so inspired by all the work that Justice Funders has been doing over the years and for this inspiring vision of just transition that you just laid out for us. I'm Amrita Vasan from the Center for Economic Democracy and really excited to be in this conversation with you all today. I've been thinking a lot about Bell Hooks since she transitioned, and I've been thinking a lot about belonging and her work around belonging. And social justice investing is really just the choice to belong to a vision of abolition in our lifetimes, right? A regenerative economy that repairs and builds. Belong like all the people in social movements choose to every day by taking enormous risk in challenging racial capitalism and building alternatives predicated solely on our integrity and our love for our communities and the accountability we have to our communities, even when there is little or no hope of returns. If you are here, you have subconsciously, and for the majority of you with a lot of intentionality, already made this choice to belong. So how do we honor this belonging? We honor this belonging by creating pathways for community power building and deep strategic movement alignment and coordination. That's our North Star. We honor this belonging by not settling for false solutions and instead co-developing organizing strategies that deepen our intimacy with our own values. We honor that belonging by honestly assessing where are we at, what can we move, and what can start to push the edge even a little. We've never needed our social movements more than we do today. The past few years, social movements have made explicit our determination to engage our hardest fights under the most ridiculous conditions, to build mutual aid networks out of thin air, to ground in our shared analysis and collective care, to insist and innovate on shelter, and to challenge white supremacy. People within social movements know how to build community power, to organize, to innovate robust, just infrastructure. We are growing our capacities to co-govern resources, to be in principle struggle with one another, and to take care of one another. Social justice investing is about building community power and being in accountable coordination with social movements. There are some real barriers to investing and to belonging to social movements in this way, and none that can withstand our collective brilliance and perseverance. I'm going to give a brief sketch of a few tools for assessing and plotting out pathways for action that folks at Center for Economic Democracy have been drumming up in conversation with a lot of our partners from social movement, from community, impact investing, and philanthropy. And we're calling this work social movement investing. I will not be going into depth of detail with these tools, but my hope is you're able to identify moments of resonance where you want to dig deeper and be in conversation with us to co-develop these strategies. So we'll start with the capital coordination ladder. Slide, please.
Grabbing it, sorry.
No worries. So we start on that journey by being explicit about what rigorous coordination looks like, rigorous community power looks like. So this is where we're asking ourselves, how are our investments actually shifting power? And our answer will be at different places, right? Our organization, our family, our investment committee may not have asked this question at all. So that's the non-participation at the bottom of this. Or we may be stuck in a tokenistic symbolic space. Or maybe we are trying to move from a place of informed coordination where we do give some consideration to movement analysis and demands to accountable coordination where folks in movement and community are in the driver's seat. So in the social movement investment framework, we further define areas of capital stewardship from decisions on personnel, financial goals, a community power thesis, and selecting investments. A lot of us here are familiar with Thousand Currents Buen Vivir Fund. They are structured for accountable coordination throughout the investment process. The fund's investment practices build on existing community lending practices developed by grassroots groups themselves that are already proving effective on the ground. And another example that you all must be familiar with is the accountable coordination between investors and social movement leaders at the Olamina Fund, where a community advisory board has a veto vote so that no loans can be done without their consent. So I want to move us to just in transition investor tactics. So once we've made our community power coordination assessment, we map our investor posture and our investor tactics on the just transition spectrum that Maria was speaking to, which moves from stopping the bad, where we may adopt a reform investor's posture using exclude, engage, or control tactics like divestment, shareholder campaigns, or even hostile takeovers, to transition to building the new restorative, regenerative solidarity economy, where our investor posture is one of convert, seed, and sustain. So once we've assessed and mapped out our capital coordination and our investor tactics, the question we want to ask ourselves is, what does movement alignment and strategic coordination really look like, and how do we not fall into the trap of false solutions? In this map, on the horizontal axis, we have our investment strategies across the resist to build just transition spectrum. And on the vertical axis, we have our capital coordination ladder from none to accountable. So if you look at the bottom left, it represents the universe of vehicles available to conventional impact investors that are not movement aligned because they lack movement coordination and do not get us to our North Star of bolstering movement power. For example, like an individual investor might make screening choices in a vacuum, and even if those choices are good for the world, it will not build the transformative narrative and cultural power without a broader grassroots campaign to contextualize that individual investor choice. So in contrast, like when the indigenous water protectors at Standing Rock organized against the Dakota Access Pipeline, one of the fronts of their resistance was the defund DAPL front, right? Which activated individuals, institutions, and cities to divest their funds from financial institutions involved in financing the pipeline. These public divestments amplified that visibility and credibility of the water protectors, building the kind of narrative and cultural power we need for transformation. Investment and divestment can only be strategic from an impact perspective if they amplify existing or make possible new social movement strategies. So we take our assessment of the capital coordination and investor tactics, check for false solutions, and then arrive at the movement investment matrix where we which can be used to map investment tactics across asset classes and just transition spectrum in more detail. The matrix places us in a field of practice where capital vehicles and social movement tactics can come together, and it invites us to brainstorm and innovate new strategies. So no matter how you are invested, there are always, across every asset class, opportunity to start leveraging your positions for movement ends at various levels of risk return and liquidity. Some examples here are following an inside-outside strategies with organizers on the ground and agitating to install values-aligned management that changes hiring and supply policy. It could be a short position against a private prison stock in coordination with abolitionist campaigns. It could be a structured worker ownership exit to support workers organizing to own their own workplace. Over time, we can envision the shift of philanthropy and valued-aligned investors as the first wave in this broader just transition, where we divest from extractive capitalist secondary markets to democratically community-controlled primary investments. Shifting towards primary holdings that build power will take time. But in the meanwhile, those who currently hold investments in extractive corporations can leverage those holdings to build social movement power through coordinated resist investment strategies. While those of us who have fewer constraints can begin immediately shifting holdings towards build side investments. As you begin to explore a social movement investing approach with your own portfolios, there are tools available to evaluate possible investments for their potential to shift power, and for constructing what we are calling a movement portfolio that aligns with social movement investment values. And there are also ideas on how to tackle some of the most common barriers that we come across. And we'll be dropping the link for that resource in the chat. If social movement investing and the broader field of movement finance were to mature, the implications are tremendous, right? The implications for progressive movements could be so profound. For grassroots organizers, standing alliances with movement investors could encourage the integration of capital strategies as a new but essential dimension of campaign planning. Asset owners and managers would become visible on a power map, not only for the resources they could deploy, but also for the positional power they could wield. For social justice enterprises and solidarity economy practitioners, the expansion of investors willing to make non-extractive loans could be the difference between succeeding as a high road business or failing in a race to the bottom. In closing, the invitation here is to ground in your belonging, assess honestly using whatever tools work for you, and to chart pathways away from those false solutions. We're in this incredible moment, like where we are all learning and growing together. Justice funders, Just Futures, neighborhood funders groups, Solidaire, Funders for Justice, Transform Finance, Resource Generation, Center for Economic Democracy, all of us and so many others. We're here to be in community with you, to brainstorm, dialogue, persevere through the messiness, learn, grow, and bolster one another's courage. So having said that, Just Futures, I'm so excited about their work, is doing a lot of exciting work and really digging into the principles of social justice investing and what non-extractive terms and accessibility could look like. I will pass it now to Anand, who has been supporting Just Futures through a research process to talk about this.
Beautiful. Thank you so much, Amrita and Maria, for queuing this up so far. Like Amrita said, my name is Anand Jahai, and I've been supporting Just Futures as a consultant. And part of what I've been doing is looking at various frameworks to help Just Futures guide its work and develop its own framework for social justice investing. Maria started off with applying the Just Transition framework to investing and shared Justice Funders' work that considers investing as a means for wealth redistribution. Amrita then shared CED's social movement investing framework to help us understand how investors can play a role in aligning with social movements and building community power through both building the new and fighting the bad. Just Futures is aligned on that North Star that both of them talked about in terms of how we define social justice investing. And that's around movement-led efforts for financing community-controlled institutions as a key strategy for building new regenerative solidarities economies. So I'm going to share Just Futures criteria for how we're defining social justice investing. In addition to justice funders and CED, Just Futures definition was inspired and informed by Nomaka Agbo's work on restorative economics, resource generation, Adesina social capital, transform finance, and others. One note is that this sector is still emerging. And so the criteria that I'm going to present here, the way that Just Futures is looking at them is as more of a spectrum and not just a checklist or a yes or no. There's variation within the sector in terms of how much adherence or alignment with these criteria fit for various funds or various players, but all 5 of these criteria, we believe, should play some sort of role in framing what we're talking about with social justice investing. And then finally, one point that I'll lift up is that there's a lot of overlap. The first 3 criteria that I'm going to touch on, there's a lot of overlap with what Maria and Amrita already spoke about. So I'm going to be pretty quick about moving through those. You'll see them in the slides. And then I'm going to spend a little bit more time on the last 2 criteria. So we can move to that first slide, which is the first criteria, which is around movement alignment. And this is something that Maria and Amrita already spoke about quite a bit in their presentations. For Just Futures, social movements are a place where those who are most impacted by extractive systems can work to change those systems. So any investment strategy that seeks to undo extractive relationships should be rooted in social justice movements. So Just Futures shares that analysis that justice funders and CED have already lifted up around not just being aligned with social movements, but being led by social movements. The next criteria is around investing in and building power with marginalized communities. Again, this is connected to that first criteria, and we believe that by being rooted in social movements, that helps ensure that this is happening. Social movements are designed to prioritize marginalized communities and build power in those communities. And so by being embedded in and led by social movements, it helps achieve this goal or this criteria. But it is also important just to name on its own that a big purpose of this social justice investing is about building power and restoration. So we wanted to explicitly list it here. The third criteria is around supporting community-controlled institutions. And that's something that Maria already laid out a little bit, talking about institutions such as worker cooperatives or community land trusts and credit unions and various forms of CDFIs or community development financial institutions. These are institutions that are, because of the way that they're structured, they're rooted in community, they're owned cooperatively or collectively or communally, and they're governed democratically. And that helps ensure that both the benefits, the economic benefits that they produce can stay local to community, and also that they're accountable to the communities where they're based and that they're serving. We did find in doing this research process that some social justice investing will also support some small or local businesses that are structured as traditional businesses. And those are typically, like I was saying, small local businesses that are really rooted in community and operating in right relationship with the larger community. The next criteria, and I'll spend a little bit more time on this one, is around having a non-extractive relationship between the investor and the investee. So social justice investing, one of the core components of it is that it uses the market to empower communities, not the other way around. So that means that financial return is secondary to advancing justice and restoration. So profit is often a part of the model for these social justice people doing social justice investing work. But it's secondary. It's secondary to justice and restoration. Some examples of social justice investing don't seek a financial return at all. There might be a 0% return on it. And across the board, we're seeing lower than market, below market returns for that reason that we're not expecting. We're not prioritizing profit. We're prioritizing community and justice. Connected to that is we're typically seeing longer term investments. And that's because, again, the purpose of this investment is to support community and build power, and that's a long-term project. So the type of investing that we're seeing in the social justice investing sector is not like, we're not trading minute to minute, day to day, or even week to week. A lot of the investing that's happening in the sector is happening on a monthly, but often longer than that. We're talking about like yearly. A typical investment might be 1 to 2 years. And in some cases, we're even seeing up to 10 or longer years for an investment term. But really the core part of this criteria around non-extractive terms is that there's a relationship between the investor and the investee, and that relationship is rooted in trust and cooperation. So in traditional investing, there are financial and or legal repercussions if the investee isn't successful or can't repay the loan. That's typically not the case in this social justice investing field. Some social justice lenders or investees don't require collateral or personal guarantees at all, which just shows the importance of that, the strength of the relationship and the trust there, because they don't have the leverage. They don't have the ability to wield those sort of negative repercussions if the project isn't successful. So they have to really be invested in the success of the project that they're funding. Often investors are providing technical assistance to the investees. And then often they're also providing grant capital to help projects get off the ground. The final criteria that Just Futures would like to lift up is around accessibility and making investment opportunities accessible to ordinary people. For Just Futures, this is one of the key criteria that separates social justice investing from impact investing, because a lot of impact investing still relies on just wealthy individuals choosing to be somewhat charitable in how they're allocating their funds or investing their funds. By designing investment opportunities that are open to ordinary community members, that empowers community members to own a stake in the improvement of their community. What this means in practice is social justice investing will often strive to allow for non-accredited investors. And for those of you who might be a little bit new to this space, that means an accredited investor is somebody with an income above $200,000 a year or with a net worth above $1 million. That's not most people, and certainly not most people in the communities that we're talking about centering. So it's important for social justice investing to work towards allowing for non-accredited investors to invest. It also means low fees or no fees, and either low or no minimum investments, so that people are able to invest small amounts of money. If you don't have a big amount of money sitting around, you can still invest a small amount. And I will say that this particular criteria is still a growing edge for social justice investing sector. But I'm excited that a little bit later today, we're going to have an example of a social justice investing project on the ground, the Boston Ujima Project, that's doing a really amazing job of making their work accessible to ordinary community members in a number of ways, not just as investors, but also as investors. They've developed a product that allows Massachusetts residents to invest just $50 into a fund, which is really exciting and innovative. So that's a little bit about what social justice investing is. We can go on to the next slide. We're going to talk now a little bit about what social justice investing is not. And some of this was already alluded to by Maria earlier on. So the first thing that we're going to get into a little bit is talking around about this world of responsible investing or ESG investing. These are things that are more widely known than a lot of these social justice investing examples. Broadly speaking, this realm of work considers the environmental, social, or other impacts of publicly traded companies through ratings, screens, or formulas. There's a really high demand for this type of investing, and that's really important to lift up. People want their money to be doing good. People want to feel good about where they're investing their money. They don't want to hear that they've invested in some company and then hear horror stories about that company on the news, or how they're mistreating their workers, or how they're destroying the environment. So there's a high demand for this sort of product, this responsible investing or ESG investing approach. One recent report found that 63% of millennials and 80% of Gen Z had asked their financial advisors about ESG options. And I think Maria or Mika might have spoke about this a little bit in the introduction, but $17 trillion, which is 1/3 of the total US assets under management, have been moved to products that are at least branded as responsible or ESG. So there's a lot of evidence that there's a really high demand for responsible investing, and people want to be doing good with their money. They want their money to be in responsible places, and they want to be supporting things that they can feel good about. Often when people think about ESG, they're thinking of ESG as screens that leave out or that prevent problematic companies from being included in a given fund. But that's often not the case, and especially in more mainstream or larger institutions, we're seeing a softer implementation of ESG, which is known as ESG integration. ESG integration only considers environmental, social, and governance concerns to the extent that they may impact overall profitability. So the line of thinking there is not necessarily that we shouldn't destroy the earth because we only have one earth, or that we shouldn't exploit workers because that's a morally bad thing to do. The thinking is that behaviors in that way could potentially at some point down the line come back and negatively impact the profitability of a company. So in that way, those sorts of behaviors, the negative social behaviors, the negative environmental or governmental behaviors, are often factored into a formula that just allows fund managers to allocate a little bit less to a company that they normally would have. And so this strategy of ESG integration still allows for a lot of really problematic companies to be included in products that are branded as ESG or branded as responsible. So in my research that I've been doing for Just Futures, I looked under the hood a little bit at some of these ESG products, especially at ones that are made for retirement accounts or retirement focused products. And I just wanted to lift up an example from BlackRock, which is the largest asset manager in the world. A lot of people, I'm sure, have heard of it. They have a line of retirement accounts that are branded as ESG, they're branded as responsible. But if you look at their holdings, those funds have holdings in companies like ExxonMobil, Amazon, Facebook, Bank of America, and all sorts of other companies that, to say the least, would raise a lot of red flags for people in social movement spaces, and are major polluters, have violated many social norms, and have negatively impacted communities and workers in a number of ways. And BlackRock is not an outlier in that way at all, but they're representative of what's happening in the field. The reality of ESG is that it's very difficult to hold rigorous screens and make market rate returns. It's really difficult to do both of those things. A lot of the experts that I interviewed during the research process for Just Futures said that it's impossible to do both things, that you're going to have, to some extent, you're going to have to sacrifice returns. But a lot of the big asset managers don't want to do that. Some of them also acknowledge or recognize the high demand for ESG products. And that allows them to just charge higher fees for products that are branded as ESG. But as I was explaining earlier, they can actually, the holdings can resemble just regular holdings of a fund that's not branded as ESG. I do want to lift up, before we move on from talking a little bit about this public equity space, that there are some players, ones that were lifted up for me specifically during the research, are organizations like Natural Investments, Adesina Social Capital, Majority Action were lifted up, and then I think Amrita lifted up a couple as well in the shareholder advocacy world, of people who are doing some ESG work or are doing forms of public equity work that is really on the cutting edge, and they're doing it in relationship with movement, and they were lifted up as doing a really good job, but they're not at all representative of the field more broadly. And then the final piece that I want to touch on, the second set of false solutions that I wanted to lift up, is another one that people have probably heard a lot about, is Robinhood, the Robinhoods of the world. There are other Robinhood type platforms like Webull and those. The way that Robinhood frames itself is as it's democratizing finance, and I think I've even seen some language around democratizing finance for the 99%. But in practice, that's not how Robinhood works or how these platforms work. Specifically for Robinhood and for a lot of these, they're fundamentally structured in a way to funnel money from just smaller retail investors to the same problematic multinational corporations. So the way specifically that Robinhood does that is they only allow for direct investment in publicly traded companies. So you can't invest even in a mutual fund, no type of fund through Robinhood. You can only invest directly in a publicly traded company. And there's no access to private markets, and there's no access to debt at all. And one thing that we'll learn a little bit over the course of this series is that a lot of the social justice investing sector is debt investing. But anyway, Robinhood is really truncating the type of investments that people are able to make there. And then I won't go too in depth about it just for time, but I'm sure people remember last year there was a lot of stuff in the news about Robinhood and Reddit and GameStop and what's going on there. That was a complicated situation, and there were a lot of dynamics at play. But one thing that was lifted up through that process is that when things got kind of tough, Robinhood curtailed its users' autonomy, and it didn't allow certain types of trades that were not aligned with some of the powerful partners, the interests of the powerful partners there. The way that Robinhood makes money is by partnering or contracting with what's called market makers. And in this case, the case that came out related to the GameStop kind of scandal was this partnership with Citadel Securities, which is connected to a huge hedge fund, which is a market maker that basically makes micro profits off of all of its trades. And so the structure there is a fundamentally extractive relationship between the individual retail investors and Robinhood. So I think Robinhood is doing a really great job of co-opting our language and talking about democratization, finance, and the 99%. But if again, it doesn't take much looking at it to see what's actually happening there. So now that we've provided some definitions and some frameworks, now we're going to spend a little bit of time looking at what social justice investing really means in practice and how it looks on the ground. We're going to spend a little time looking at one example, which is the Boston Ujima Project. So I'm excited to be joined by Nia Evans and Jock Payton of the Boston Ujima Project, Nia and Jock. Thank you so much for joining us. So I have a few questions teed up for Nia and Jock, and then we're gonna pass it. We're gonna open it up to Q&A after a little while. But I'm gonna enjoy my moderator or facilitator privileges and ask some of the questions that I want to pose to y'all first. So my first question is for you, Nia, and if you're able to try to answer this question in about 2 or 3 minutes, keeping it pretty high level. For people who may be unfamiliar, can you briefly describe the Boston Ujima Project's model?
Sure. Thank you, Anand. And good morning. Still, if you're on the West Coast, and good afternoon to everyone here. Looking at the participants and see a lot of names of friends. And usually I try to give some shout outs, but I don't have a lot of time because I do talk a lot. So I won't do the shout outs. But really quickly, Ujima is Swahili for collective work and responsibility for those who don't know. And Ujima is familiar to a lot of people as one of the 7 principles of Kwanzaa. I like to say that when you think about that phrase, cooperative work and responsibility, every word of that phrase is an apt descriptor of Ujima. For the sake of brevity, I think there are just a couple of things I'll talk about right now. One is Ujima is an ecosystem. So we're very intentional about the ecosystem approach. I believe it was Maria earlier who talked about the nature of what we're fighting, the systemic nature of what we're fighting. And so the importance of our response needing to be systemic and of a parallel scale to really address and then to build something new. So we're very intentional about the ecosystem approach. And when I say ecosystem approach, what I mean is we aren't doing just one thing. We're doing a few at the same time in the same place. This was very intentional, resulting from a study on what it would take to start a public bank that we did in 2014. And at the end of that study conducted, doing just one thing would not be sufficient. Our ecosystem has our membership body at the center. So we are a member-based organization, and it also includes the Ujima Fund, which is what this conversation will focus on, our Good Business Alliance, our Anchor Institution Strategy, which is where we work with hospitals, universities, and large faith institutions to do business with our businesses, and our assemblies, which is something that we've adapted from Cooperation Jackson. For anyone who's familiar with the assembly practice of Cooperation Jackson, we use the assembly practice to glean investment candidates from our members. The Ujima Fund is notable as one of the first democratically governed investment funds in the nation. And what that means is that it is our voting members who decide directly on what we vote on what we invest in via a vote. Each voting member of Ujima gets 1 vote, whether or not they invest, and regardless of any amount that they invest. So that's one of the things the fund is notable for. And something else I was already mentioned is our minimum investment in the fund is $50. We created a pool. I think you mentioned this, Anand, very intentionally for unaccredited investors in Massachusetts to be able to provide direct investment opportunities for working class people of color in Massachusetts. And then finally, we very intentionally designed the fund to return the most to that pool. So that pool aims to return 3% to investors who have invested in that fund, or who have invested in that pool or in that note, I'm sorry. And then the returns go down from there, which is an inverse of what we would normally see in a traditional investment relationship. And I will pause there. I hope I did well on time.
You did great, Nia. Thank you so much. Jock, I want to turn to you. I'm wondering if you can share a little bit about what is the relationship like between Ujima and investors. I'm wondering about how do you ensure that investments are non-extractive? And then just some of the, what's the average size, length, and rate of return for investment?
Yeah, thanks, Nand, and certainly a pleasure to be here with you all today. So when I think about the relationship that we have with our investors, I think it's both exciting yet accountable. because there's so much positive work that we're doing. But at the end of the day, these still are community investors, and we still are kind of beholden to them to make sure that we can redistribute wealth back to our community. I think one of the things that's really unique about what Ujima does, and I came from a background in the more kind of traditional asset management spaces, we open up our investment presentations to the community, to our investors, and to our voting members, and let them kind of take part in the conversation that we have with the management team. And then, as Nia mentioned, they're then responsible for making a decision on that investment. And I think that's just a really unique aspect of what Ujima is doing. Once again, traditionally, you would speak to a portfolio manager or a loan officer to make that decision. And it's really kind of up to that single person or maybe a small investment committee. But here with Ujima, we really open that door to our investors to make sure they have a voice in what we're doing and can take part in the exciting work that's taking place. When I think about the rate of return for the investments or whether or not they're not extractive. So we do have, a rate of return to our investors, and what we try to do is keep that spread really as small as possible. So far, loans have been just over 4%. And once again, if we think about the cost of capital for our fund, around 3%, there's not much of a spread that we're really looking to get outside of just covering some of the operational costs of the project. So, but when I add in all the technical assistance and the marketing support and the anchor institution support that we provide, in which we have been able to convert contracts to some of the businesses that we work with and help bolster some of their business practices, then I feel like it's almost a net positive that we really are providing them. They are paying a small amount of interest, but once again, all of these pro bono services through the partnership network that we provide really, I think, outpaces, that of the interest that they ultimately pay back to the fund, and really are just paying back to the investors of the fund, the community members here in Boston. And sorry, the last question was around the average size and length. So I already kind of spoke about some of the returns, once again, just around 4 and 5% sometimes, but they've been long-term investments, at least from our perspective. Anywhere between 5 and 9 years so far have been the length of these investments. And, we think that is just a patient way to provide, that capital in order for them to really get off the ground. Although a couple of the businesses are currently in operation, there are a couple that are just now starting up. So, we want to be there. We want to be a partner, not just through the technical assistance and marketing and contract support that we provide, but also through that capital support and making sure that they don't feel that burden to repay a debt or to repay an investment immediately. And I think that's one of the, once again, really unique aspects of it, is that we're not looking for that immediate return. We're really a long-term investor, and we want to be there with them through the growth of their business.
Awesome, thank you, Jacques. I'm going to turn back to you, Nia. A big part of the presentation so far has been about how social justice investing really needs to be led and kind of embedded with movement. So I was hoping that you could talk a little bit about how Ujima is connected with movement, and why that's a powerful strategy for Ujima.
Sure, thank you, Anand. So yeah, I think there are a couple of key points I want to make with regards to this question. So first, when we first started out to form Ujima, I mentioned the study group that was looking at starting a public bank. That was in 2014. Participating in that study group was a group of about 40 different organizations of different kinds. So it was made up of some impact investors, made up of some academics, and it was also made up of quite a few organizers. So one of our co-founders, Aaron Tanaka, who I believe a lot of people here may be familiar with, for example, was previously the ED of Boston Workers Alliance, which is a local local grassroots organization, Lisa Owens, who at the time was the ED of City Life Vida Urbana, which is Boston's premier housing justice organization. Before I started at Ujima, I was the ED of the Boston branch of the NAACP. I mention that because we all have come from some type of organizing or advocacy background. So Ujima was rooted in organizing and in grassroots practice from the beginning. So that was one of the ways that we've joined movement work with investing, is essentially with those of us who came together to work on creating Boston Ujima Project. A second thing that we did was we were really intentional about thinking about grassroots organizations that were already present, that have been doing a lot of great work already, and being mindful in being a new organization and being kind of a shiny organization that was getting a lot of attention, being mindful not to divert resources away from those, inadvertently divert resources away from those organizations. So part of our practice when we do assemblies, for example, is we actually co-host our assemblies with a grassroots partner. We very intentionally set out to form grassroots partnerships with member-based power building grassroots organizations in Boston. And then when they let us know that they are ready to host an assembly where they are, that's when we host an assembly. And so that's one of the ways that we join movement work with investing, and working with member-based organizations actually allow us to connect directly with working class people of color that we want to work with in Boston. Second thing that we do, and it's not the only thing that these two are not the only things that we do, but a second thing that we do is every week we have weekly financial and political education. And this is actually a practice that we adapted from City Life Vida Urbana, who has weekly political education meetings with their members. And so that is a space for people who are engaging with Ujima to co-create Ujima. So it's a space for our members to co-create Ujima with us. And it is also a space for Ujima, for us ourselves, as well as our members, I would say, to really kind of have a solid grounding or a solid undergirding to the work that we're doing, which is really important. So as you said in your presentation, Anand, it's easy to kind of take on new buzzwords and throw them around. So inevitably, this work gets co-opted. All of our work will inevitably be co-opted. So it's easy it's easy to toss terms around and not really think about the belief systems that underlie the terms that we are using. And so we use our political and financial education sessions every Wednesday to really kind of give people an opportunity to think about that. We don't necessarily prescribe it for others, but we offer the space for people to think about it. And the last thing that I'll say, the reason it's really important, I think, to join movement work and investing is because, the act of investing and the structures that underlie investing until pretty recently, but for the most part, have been pretty invisible and pretty powerful. They shape our communities. And so one of the reasons Ujima was so compelling to me when I was at the NAACP and learned about Ujima was I saw it as an opportunity for people to kind of mitigate these feelings of powerlessness. I think that happened when we're engaging in kind of traditional advocacy in which we are kind of appealing to decision makers or authority figures to be benevolent and to hopefully for us to kind of align on the same agenda for our communities. I think a lot of the important work that we do has been visibilizing some of these systems and some of these processes so that we can then understand them, so that we can, reform them, understanding that reform is enough, but then in kind of understanding the systems, then we can also just then think about how we just completely create new systems. And so I think that's why it's important to join the movement work with investing.
Thank you for that, Nia. That frame around visibilizing is really, really helpful. Jack, I'm wondering if you can talk a little bit about the specific businesses that Ujima is supporting and just add a little bit of texture there.
Absolutely none. So there are a few businesses. First in our business alliance, and just give a little background. In order for a business to join the Ujima Good Business Alliance, they first have to agree to a set of community standards, and that's a set of standards that has been voted on and created by the community. But once they have agreed to those standards, at that point, we open up our arms with resources. And just to name a few businesses, one of the first investments and one of the first members of the alliance was a co-op named Cero, a compostable waste company. And with them, we provided a number of things, not just technical assistance from board governance and worker owner kind of membership building and training, but also around, as I mentioned just a little bit earlier, anchor institution work. We helped them actually secure a couple of contracts with universities here in the area, which is extremely impactful to that business to be able to have a large university, or actually two separate large universities come on as clients of theirs, really help undergird the strength of that business. And it's something that we were really proud to help, or to say that we played a part in. Some of the other businesses that we work with have asked for other forms of technical assistance, whether it be letters of support as they seek grants from other organizations, whether it be financial modeling and kind of going through the pro forma financial statements. That's something that we've helped businesses with. And then also just the overall marketing and community engagement with the businesses as we look to support them in their day-to-day operations. As I mentioned, one of the companies is named Jazzer Bank Cafe. We actually just made an investment into them, and that was a pretty unique investment because it was an equity investment. It wasn't debt, and it's going to be a really unique way for us to once again provide them an opportunity to have that runway for growth and to stabilize their business without us seeking immediate returns. But in that process, we've really been helping them market some of the live performances that they're going to be hosting across various institutions in the city. Jazzer Bank Cafe will be an arts institution for live music, live performances in the Nubian Square area of Roxbury. So for us to really take part in one of what we believe an anchor institution, or what will be an anchor institution in a building that has been, or at least a section of the building that has been left vacant for 5+ years, right in the heart of Roxbury, Massachusetts, is really just powerful to us to say, like, all right, we're not just here, but we're bringing a crowd out. We're spotlighting this business. We're highlighting this business, not just from a technical way, but also in a way that will help drive revenue and really support them in the long run.
Awesome, thank you, Jock. And I'm gonna be up in Boston in a couple months, so I gotta check out Jazzer Bank. That sounds cool.
Come by.
This is for both of you, or whoever wants to answer this one, but can you share what's the size of the fund, and do you have any plans for growth in the future?
Go ahead, Jack.
All right, so I guess the current size of the fund is, I guess $5 million was the initial goal to raise. Once again, we know that this is kind of a cutting edge technique that we're going with, including the community and making this a democratic process. So that's this first fund. This fund is scheduled to end, as far as our investor notes are concerned, by 2028. But most of that capital will be deployed, far before then. So obviously, I think the goal would be to increase the size of the fund, not just into small businesses, but I think Nia can elaborate a little bit more on growing into the real estate aspects of community ownership as well. And maybe I'll pause there to let Nia fill us in a little bit more on the real estate aspects.
Sure, and I won't say too much about it because we're still early in concept, but we're really excited about it. And so what Jock has just talked about is we've started to think about our next fund. From the beginning, one thing that we were sure of is if we were able to demonstrate success with this fund, which is a $5 million fund, then a natural next step would be to then start a larger fund that would be a $25 million fund. So we do see this $5 million fund as more of a pilot. It's small. in our space, and then a $25 million fund just seems, to be a more appropriate scale in terms of impact. And as Jacques previewed, we're excited to think that that fund, we are working on seeing if it can be essentially an all equity fund, because our current fund, it's debt. And if that fund can be focused on real estate. So I think, as you know, Anand, there's a lot of exciting work in thinking about land and real estate in this field, from East Bay Permanent Real Estate Cooperative to what's happening with Community Land Trust, and to, for example, the way we started to think about this, our exploration with a couple of CDCs here in Boston who want to think about how to provide direct community ownership in their projects.
Awesome, thanks, y'all. That's exciting to hear about the plans or the schemes for a second fund. My last question is for you, Nia. I'm just wondering if you could share what were some of the challenges that Ujima encountered, especially in the early days, getting off the ground, and what are some of the challenges that you're navigating today?
Yeah, I think one of our primary challenges was of a technical and legal aspect. So we initially thought that the fund would be hosted by one of our peers and close partners, and then learned from attorneys that it would just not be legally possible. And so we actually ended up delaying the launch of the fund for about a year while we were wrestling with that and trying to figure that out. And I think hopefully, luckily, because of our learning experience there, and what we're able to transmit to other groups who are looking at starting funds themselves, hopefully we've been able to kind of cut down that timeline for other communities in launching their fund. So that was one of the primary challenges. I have to say, I think we have been fortunate on the fundraising side. That was not, I think, as much of a challenge as we anticipated. So, I think this goes back to when we talked about connecting movement work with investing, and the different types of relationships that we started this work with, and the amount of relationships that we started this work with. I think that was very helpful to us in having a kind of a really powerful start. So what's the challenge now? So not surprising, I think that there is some challenge on the participatory aspects. And for me, the word challenge in this instance is not, it's not something that's insurmountable. I think I regard it right now, and we'll see as we continue to do this work, but I regard it right now as just a necessary part of the work that we have to understand is hard. So for us, when I talk about the participatory aspect, our quorum for a vote to be binding is 50% plus one. And as we gain more and more members, for example, that number rises. So right now we have about 800 members, about half of those members are voting members. And so that means when an investment, when we're ready to make an investment recommendation, we have to get between 150 and 200 people to participate. And that's hard. It's a lot of work. So it isn't insurmountable. It isn't, it's just a lot of work. And so I think that that's definitely something that can be daunting if you don't anticipate it ahead of time. So I regard it as kind of a typical get out the vote effort. I do think that as we do each investment and as we do each vote, it does feel like it's getting a little easier and smoother over time. But I think what we do know is still with each investment vote, we know we're going to have to make phone calls. We know we're going to have to send multiple emails. And we know that we're really going to have to rally everyone in our ecosystem to make sure that we meet that quorum. So that's the most challenging piece, I would say, right now.
Thank you for sharing that. And yeah, as a former organizer, I can imagine that challenge of turnout. And even for this webinar, that's the number that you quoted is about the number that we have on this webinar. And we have enough work just trying to attend to our Q&A function over here, let alone collectively making a decision together. So I hear that challenge. Thank you all both so much for giving us a little glimpse into Boston Ujima Project. I'm gonna finally shut up. Thank to y'all and our viewers for bearing with us. And now we're gonna open it up for some Q&A. So I'm gonna pass it to Alex, one of the Just Futures co-founders, to lead us through that Q&A.
Hey folks, so we have a lot of questions in the Q&A. They're really grouped around some themes. So I'm gonna kind of try to group them together. And I actually want to put Jock and Amrita on deck for the first question, which is really about ESG and false solutions. Jenna Cariccio asked a great question, a request. It'd be powerful to hear more from the panelists on why ESG investing is under the heading of false solutions. Maybe Jock, you can kick us off first as somebody who was part of the traditional investment and asset management industry, and get your thoughts. And then Amrita, from your perspective with CED, would love to get your insights there as well.
Thanks for the question. Definitely a tough one to answer. I guess I'll start by saying, many of the ESG funds that I came across were managed by asset managers and portfolio managers that also manage non-ESG funds. And it's almost as if one day they wore their ESG hat and the next they didn't, kind of seeking where they could potentially grow, the assets under management. And then there's also something to be said just around how much influence and impact some of the ESG investors are really looking to have on the operations of these businesses. I think conversations with the management teams around environmental impact and governance and some of the ways that they approach socially responsible practices in the communities that they serve are one thing. Conversations are one thing, but then actually having some, I guess, some bite and some consequences and some reactions to not doing those things is another thing. And we really haven't seen that yet. We still see investors, really going after those returns and once again looking to raise assets, based on kind of what the prevailing product is at that moment.
I couldn't have put it better, Jock. I think that, even if the intentionality is there to do the right thing, the way that I've seen ESG function is that a lot of times the investments are going into places that are actually harmful to the very, very piece that we are trying to challenge. Like I remember being really young, and I used to work at this organization called World Resources Institute, and working with some of these ESG offices, and I saw categorized Coca-Cola as an ESG investment at the same time as Coca-Cola was depleting the water table in my personal community's home, right? And taking over water rights. So it was just, it was mind-boggling to me how that could happen. There are, of course, people who are way more aligned than like that extreme example. But the central question that we are talking about here is who is making the decisions, right? If we are talking about meeting climate crisis at the place that we are at right now, there is no way we are going to be able to do that without the expertise of social movements and community groups that have so much capacity for co-governance, have so much capacity and shared analysis on how we're shifting to that future, right? And there's no way to do that. And a lot of ESG investment does not take community power as central, right? It's not looking at how is our investing really shifting power to the people who are really fighting the climate crisis. So that would be to me like the big distinction. That's the question I would ask. How are you shifting power?
Thanks so much, Jock and Amrita. The second sort of bucket of questions that we saw in the Q&A, to me, reads about, growing the field of social justice investing, getting more adoption, getting more folks really thinking about, investments from a regenerative standpoint. So I will put on deck Maria, Jock again, and maybe Des. Like, there's two buckets of this, and also Nia and Anand to also be on deck from an institutional perspective, right? So we're talking about foundations, private equity, venture capitalists. How do we expand access, right? Or get them sort of closer to the circle and thinking a lot more about social justice investing from the criteria that you all have laid out. And I would again point to Des, Maria, Jock. And then the second part of the question, and this is for more Nia and Anand, how do we expand access to social justice investing for ordinary people, right? So on the institutional front, Des, Maria, Jock, who's ready to jump in?
I can jump in, and I think I'll rep JF generally, so it'll probably just be me and not me and Des. I think from Justice Funder's standpoint, like I said, we do work with foundations, and foundations we consider our institutional investors. I mean, I think for what we see as the barriers, right, are like these deep-seated mindsets and cultures within institutions and also within individuals about the role of capital, the assumptions about what capital should be used for and who should be expected to gain the financial return from the economic activities that are happening in community. And so fundamentally, like, there just needs to be, it's not just like, hey, here's this thing, go do it. Like, there needs to be like some really deep, conversations, education, like individual and organizational learning journeys that need to happen. The changes are not going to happen overnight. Folks aren't going to be like, oh, I'm just going to divest from the market today and then reinvest in the other thing tomorrow, right? And I think that's what organizations like Resource Generation and CED and Justice Funders, there's other organizations out there, Solidaire, for example, right, who build and nourish and nurture communities of individuals and institutions who are going through these journeys together. And so I would say, like, find your people, right? Find a community, like become a member of one of these organizations, attend these kinds of webinars, be in conversation with your peers, have those conversations, and that's how you become connected to the work. I think it's really hard, especially if you feel isolated, if you're not surrounded by folks who are doing this work and who have these values and putting these values into action. So yeah, go find your people and go on the journey together.
Yeah, I can agree more with Maria. It definitely starts with just, opening up your ears and having those conversations, especially from the institutional perspective. And I always kind of think about, would it be easier to teach a finance person how to be a community organizer, or a community organizer how to be in finance? And I think it's probably easier to teach a community organizer how to be in finance, to be quite frank, because that's a skill set that can be learned, whereas community organizing, that's really an emotional aspect, and that brings so much more to the table. And I think that's what institutions really need to think a little bit more about. It's just the type of people that they're in a relationship with and that they're hiring into their organizations that can connect them with the community in a way that's meaningful and substantial and really meaningful in the long term. So I think that's really where it's going to come, is developing those relationships, hiring the right people, but then keeping those doors open to make sure that you're learning and listening and exchanging the information that can be valuable and powerful for the community, which means that the institutions will have to cede some power.
Awesome, thank you both. And I guess a final question related, Anand and Nia, about this question around increasing access for regular folks, ordinary folks, to social justice investing. If you can, each of you in 1 minute, because we're almost at time, quick thoughts, right, on how.
Sure. So I don't think it's much different from what Maria and Jack have talked about. So I do think when we're talking about institutions, yes, we're talking about the institution, and we are also talking about the people that make up the institution. And so I would say, just as it's very relationship based, similarly, when we're talking about ordinary people, it comes down to relationships, and it comes down to trust, and it And so I would say that's one of the ways we provide access is genuine, trust-based relationships whereby people can access information. And then finally, efforts like Ujima, which are then providing the actual platforms and the actual mechanisms to be able to do the investing. And yeah, that's what I would say.
Yeah, I'll add that this wasn't a super focus for my research, but it did come up a lot. And one thing that I do want to lift up is that our financial system it wasn't designed with the intent of ordinary people being able to invest and empower their communities through that. It was not designed to do that. And so there have also been instances of just sometimes like there needs to be a legal fight, that we need to change the rules to allow for non-accredited investors or ordinary people to invest. So I do believe, we mentioned EBPREC earlier in the call. I do believe that before EBPREC, there had to be legislative work done at the state level for that model to be viable. And yeah, I do think that there are other examples of people needing to figure out like how to crack this nut around opening things up to non-accredited investors and being creative. But yeah, I think there does have to be an acknowledgement of kind of the economic structures that exist and the actual, in some cases, legal barriers to that work, and finding people who are able to start addressing those.
Thanks, everybody. I'll turn it over to Mika, who will close us out and discuss next steps.
Thank you so much. Let me grab my slide here. Wow, this has been incredible. Thank you so much to Anand, Maria, Amrita, Nia, and Jacques for sharing all of your wisdom with us today. Truly have a lot to sit with and think about, and I'm sure the more than 300 people who joined us today also have a lot to think about and reflect on. Thank you again to our co-sponsors for helping to make this event such a success. As a reminder, we'll be hosting sessions 2 and 3 of this series on May 26th and June 22nd. I will be sending out a follow-up email with those registration links, a recording of this webinar. I know a lot of people asked about the transcript in the chat, so I'll be sending resources that were mentioned and any other materials that I'm able to get from Zoom, I'll share. Des is sharing a link right now to the chat for a very brief session evaluation. We would be very grateful if you would take a few minutes to let us know what you thought of this event so we can continue to improve. Before we sign off, I want to make a quick plug. Just Futures will be hosting another webinar on June 9th called Reclaiming Retirement for All. It will present the results of our national needs assessment that was focused on nonprofit retirement benefits. And there are some really rich findings beyond just how difficult it can be for nonprofits to offer benefits. We'll look at retirement's political history, retirement as an intervention point for closing the wealth gap. We'll look at factors that contribute to equitable plan design within organizations and more. So we hope to see you there as well. If you have any questions for our team that were answered today, I know there were like a ton of questions submitted in advance, a bunch of questions in the Q&A we didn't get to, and some of that will continue on with our, in conversations with our future sessions, but please do feel free to reach out to us directly. And for more information on our program generally, you can visit our website. Thank you so much for joining, everyone.